they were such a pain in the butt. And then the Jobs Act just opened up a whole new world for Regulation A. It allows us to, it has 2 tiers, but I'm going to focus on tier 2. Tier 2 allows you to raise now $50 million. So we've gone from 5 million to 50 million. And you can electronically file, which makes it so much easier. And you don't have to get approval from any of the states. It's what's called a federally covered security. So what's the thing we have to give up? The thing you have to give up is that you do have to get an audit of your books and records in order to go forward and do this. And you also have to get it. One of the other things you really have to do is get a transfer agent. But the big thing is the audit. And I'll tell you right now, the cost of the audit is far less than what it would cost you to get approved in all 50 states, because each state has their own little filing fee as well.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke, and today we have Jillian Sidoti. Jillian is one of the country's leading experts on Regulation A+. Since 2008, Jillian has submitted multiple Regulation A offering circulars to the Securities and Exchange Commission for approval, making her one of the few attorneys familiar with the law prior to the change under the Jobs Act. Since the Jobs Act, Jillian has assisted multiple companies and entrepreneurs realize their fundraising goals through crowdfunding, 506C, and Regulation A. Jillian also spends her time speaking at seminars educating us investors how to legally raise capital for real estate investment projects. She's also the author of Crowdfunding, the Crowdfunding Myth, which debunks the multiple myths surrounding crowdfunding, as well as a premier expert on the securities matter. Jillian, thank you so much for joining us on the show. And how you doing, my friend?
Oh, thank you so much for having me. I'm doing great. I appreciate you having me today.
Yes, Happy New Year. Really appreciate it. We had talked a little bit pre-show that we kind of do a lot of education for investors, and some of the structure of this call, if you don't mind, is some of our questions from our local meetup groups. We have a bi-weekly or bi-monthly meetup group, and we said that we're going to have you on the show, and they said, what questions do you have? And it's mainly around this Regulation A, which is new to me. I don't know much about it. And also we have new investors that have access to investors that want to get involved in projects. They was curious about, payments or getting involved, as far as being a capital raiser. So,
Sure.
Before we kind of kick things off, would you mind, I know I kind of read your bio there. How'd you get started in deciding to become a real estate securities attorney?
So it's a great question. And actually, I started my career off, I never really wanted to practice law, but I went to law school like right after college, just almost as something to do. I know that sounds really funny, but it's actually very true. And then I dropped out for 2 years to pursue some other interests I had in the music industry. Not as a musician, but as a record label owner, and it didn't really work out. I wasn't capitalized enough. Believe it or not, that was actually the reason why we failed, is we did not have enough capital. I was financing the whole entire thing on my credit card, and I got back into law school and still really didn't want to be a lawyer, but I really wanted to get into real estate investing. So in my 3rd year of law school, I went out and started doing real estate development with a firm in San Diego. We did condo conversions, and that was great at the time. And in that process, my primary degree is in finance. We started raising capital for our deals. And I basically discovered this entire world of capital raising right then and there, and realizing, oh my gosh, there's this law you got to follow. There's all these things you need to do. You have to provide all these disclosures and everything. So once we once I figured that out, I kind of just immersed myself into that area of the law and learned everything I could about it. And when the economy crashed the last time, that kind of dried up our opportunities. We fortunately got out of it all right. We didn't lose any properties. A lot of people in Southern California in particular lost a ton of properties, as we all know, in the 2007 to 8 time frame. But we got out at the beginning of 2007. So we just missed like the worst of the crash. And that's when I started practicing securities law, because I just knew I wasn't going to be doing real estate development right then and there. The economy wasn't going to support that kind of development right then and there. So that's how I turned towards it.
Awesome. Yeah, I started learning more about it since the Jobs Act, when more opportunity was able to come out, and a lot of people were talking about it. I came in as flipping houses and getting private investors to fund the deal, or getting hard money lenders. And then once the Job Acts, and then you start seeing more information available on the internet. So it's kind of like I think, ever evolving thing. And of course, you've been an attorney, you've seen all of the changes. The biggest thing since our meetup group that we talk about is this Regulation A. So was it originally Regulation A? Now it's Regulation A plus. And then what's the difference? And can you kind of give us like a broad overview of what it is?
Yeah. So Regulation A was back in the day a real pain in the butt. No one used it. No, like attorneys couldn't charge enough to do the work, because the work was so hard and the law was so limited in its scope that most attorneys just refused to do them. They just wouldn't do them. And that's how I kind of got a jump on that particular area of the law, because I was willing to do that type of offering for a reasonable price, even though it was a big pain in the butt. I just saw this opportunity, and then I got the great, wonderful luck of the Jobs Act amending it all to my favor. So it worked out really great taking that chance. So what it was back in the day is you could only raise up to $5 million, and you had to get approval from the SEC. And then you had to get approval from all the states where you wanted to raise capital. So, you had you could have up to 51 different agencies approving your offering, because you have to get approval state by state in every state that you wanted to raise capital in. And then, again, it was limited to $5 million. But the big pain in the butt about it is that you had to send in paper copies. Now we do electronic filing, but back before the Jobs Act, you had to actually send in paper copies to the SEC in Washington, D.C., and they had to be original copies. Like you had to have wet ink signatures. Wow. So I'd have to have my client sign it in blue ink, because if it was signed in black ink, the SEC couldn't tell if it was an original signature, and they would send it, sometimes they would send it back to me. So I'd have to, FedEx it to my client, and then have them FedEx it back to me, and then I'd FedEx it to the SEC, and I had to send them 7 copies. Copies. Yeah, so I would send them literally boxes that were just huge, 700 pages. And I'm not joking. There was a couple times that it came into the mailroom at the SEC, and they didn't know what to do with it because they were so rarely done that they would just mail it back to me. Not even review it. I happened a couple of times. So there was such a pain in the butt. And then the Jobs Act just opened up a whole new world for Regulation A. It allows us to, it has 2 tiers, but I'm going to focus on tier 2. Tier 2 allows you to raise now $50 million. So we've gone from 5 million to 50 million. And you can electronically file, which makes it so much easier. And you don't have to get approval from any of the states. It's what's called a federally covered security. So what's the thing we have to give up? The thing you have to give up is that you do have to get an audit of your books and records in order to go forward and do this. And you also have to get it. One of the other things you really have to do is get a transfer agent. But the big thing is the audit. And I'll tell you right now, the cost of the audit is far less than what it would cost you to get approved in all 50 states, because each state has their own little filing fee as well.
And as far as kind of the auditing, is that like a quarterly thing, yearly thing, or is it like at random?
No, the audit is a yearly thing, and then they want you to do semi-annual reports. So, for example, you would report in the middle of the year your financial statements, but they would not be audited. And then at the end of the year, you would have audited financial statements.
And this will be kind of more tier to maybe a like influencer that can be able to raise a significant amount, or is it who's it? This is more structured for.
Well, I've had all kinds of people use Regulation A. I've had people who, have a really novel idea that they think will fit better for, a general audience as opposed to just focusing on accredited investors, for example. So, a lot of my offerings under Regulation A are not necessarily in real estate. They might be in, like, for example, I have a vodka company, CBD, things like that. Those types of novel, well, they're not really novel, but sexier types of industries are very ripe for Regulation A. And
And
then I
it,
have yeah.
I'm sorry,
Then
go
I
ahead.
have no, you're fine. Then I have people who are like who just want to be able to use general solicitation, take money from whomever. They might not have a huge crowd, but they believe that they can use social media to their advantage. I had another gentleman who loved to hold open lunches and seminars and things like that in his market. He certainly wasn't going to raise $50 million just doing that, but he wanted the freedom to be able to take money from whomever came to those lunches or seminars. And then finally, we have exactly who you're talking about, big influencers, people who already have huge crowds. And so, we have, like, for example, we did Jay Morrison's Tulsa Real Estate Fund, and he had a big social media following. I'm doing 2 Regulation A's right now for 2 very large real estate influencers that will be released, probably in the next month or 2. And then, my biggest one and my most successful one was, of course, Grant Cardone, who wrote the book 10X, and he did 2 Regulation A's. He's on his second one right now, raising capital for that, but he was able to raise $50 million. And I think it was 8 months or something like that, some ridiculously short amount of time. And he used his entire, his network for that.
Hmm.
So.
Yeah, that definitely. And as far as kind of like, it can be non-accredited investors for that one. It's just a little bit more
Right.
broader, I'm assuming.
So very, very flexible. So you can basically take money from anybody. What you are limited on is that you can't take more than 10% of somebody's net worth or gross income, whichever is greater. So you can use the greater of the 2, which is great. But you do have to be mindful of not taking more than that 10%. And that's just good policy. Not only is it the law, it's good policy. You're making sure you're not taking more money from
Hmm.
somebody than they're actually allowed to invest.
And as far as kind of like the cost, would it, make more sense for a, person that are, you know, targeting 1 or 2 smaller properties, or is this more kind of like a larger type of end game, do you say?
Well, it's funny because I have had clients who have, I mean, even Grant Cardone's, if you look at it, he has funds, but he buys such big properties. He usually only buys like 1 or 2
Yeah,
properties
yeah,
in
yeah.
that
Hmm.
fund, or 2 or 3 properties in that fund. I did have one client who was focused on a big development deal, but that didn't actually, go through. A lot of what I tell people is that you really want to focus on a fund model, because you don't want your project to be beholden to the rules regarding Regulation A. Like, you don't want it to be tied up with the SEC. Like, so for example, if you have a closing that has to take place in 60 days or 90 days, you don't want the SEC to be the reason why you don't get to close because you
Hmm.
didn't get it through. So I always tell people, look towards a fund model with Regulation A, no matter what your asset class is. And I've probably done every single asset class out there in terms of real estate. So any asset class can be done. You can do a specific property, you can do a fund. I most certainly recommend that you focus on funds.
And then you also had, I think I was, I was watching one of your webinars that you was kind of talking about starting your fund, which was very interesting and very informative as well.
Yeah. Yeah. And it's not that hard. It really isn't that hard to start a fund. You know, what I tell people is that when you're doing a syndication, you're selling somebody the idea of the property, right? This is the property we have. This is, what you can expect from this property. Well, you just have to shift your message a little more to saying, we're looking, instead of saying we're buying this Class A apartment building in Austin, Texas, now you're switching to we're buying Class A apartment buildings in Texas because we believe more people are moving into Texas, young professionals who are looking for a certain level of not hospitality, but rather a certain level of living that they won't find in a C or B class property. And that's why we're focusing on Class A multifamily buildings in Texas. And so you just have to shift your story a little bit and make your narrative fit your situation. And that way, then you can go out and buy any property you want.
Yeah, it makes sense. What do you say? I know like it can probably get into the weeds as far as details of it, but kind
Yeah.
of like a range of typical costs. I mean, I know it's hard to pinpoint, but kind of a range just so people can kind of know what to expect.
Yeah. To get you to the first year, I recommend you budget at $75,000 to $100,000 because there's a lot of stuff you're going to need. You're going to need technology. You're going to need, like I said earlier, transfer agent, an audit, an attorney. So you need all of these things. And if you don't have those things and you don't have them in place, then you're not going to, you're not going to be successful, A, and B, you just don't want to be undercapitalized. You don't want to run out of cash.
Absolutely. Yeah. One of the next big topics, if we can kind of switch a little bit,
Sure.
again, in our group, one of these questions came up is regarding, we have a couple guys who are connected to, a lot of accredited investors, but don't have either access to deals or, the experience level and want to partner up with other, sponsors on a joint venture basis.
Sure.
As far as them getting involved into a deal or getting compensation, how would you, advise that? And what's the kind of the best practice for that?
So you can't be compensated for raising capital if you're not a licensed broker dealer. And this is really important. I see a lot of people violating that rule these days, and it's a very dangerous thing to do. So because you will be held liable for anything the sponsor does in the event something goes wrong. And you don't want that. You really don't. The fines are incredibly high. For example, what they can do is disgorge you of what you actually made, then make you pay a fine of or a penalty of double the amount that you actually got paid plus interest. So you're looking at, like I was looking at one that I think was like, they got paid $9,000. So they had to pay $9,000 disgorgement, then $18,000 penalty, and then interest on top of that. So, I mean, and just think, just to get to that point, you had to hire a lawyer.
Yeah. So you got to pay that too.
Yeah. It's like, so I can't, it's one of my biggest, banners that I hold up is do not sell securities for compensation without a license, because you will just really cause a lot of problems for yourself. So let's talk about what you can do. And if you're in this situation where you have a lot of access to capital, but you don't have the deals, there's two things. One thing is partner up with somebody who does have the deals. Come into the situation and get a share of the equity, and then have an ongoing role of investor relations and taking care of the investors and doing that kind of thing. If you have this kind of influence over potential investors, that would be the first thing I would do. And then the second thing you can do is, let's just say you want to spread your wealth, if you will, or the availability of capital that you have around. You could do a fund of funds, where you go out, you start your own fund, and then you go and identify opportunities in which you can invest on behalf of your investors, and you put together your own paperwork, and you pay your own legal fees, and you make your own money, and then you can negotiate with potential sponsors on what it is that you want on behalf of your investors. Because once you come in with this kind of chunk of money, you have a lot of power. And so you can
Exactly.
go in and say, hey, I'm going to give you this chunk of money, but what I want in return is a piece of your GP for my fund, or I want a piece of your acquisition fee for my fund. And then it all flows through the fund. And then you set your own management fees for the fund itself. So there's really, those two ways are my favorite two ways of doing things. You either find a sponsor, partner up with them, and there's a lot of people out there that do that, and then divide up the duties, and you might not have the experience in the property, but that's what the other sponsor should be doing, right? Is having the experience with the property and finding deals. You have the experience with gathering the investors and managing those investors and doing the ongoing reporting requirements, and you just come together, or you do a fund of funds.
Awesome. And then for like the first one that you had recommended, is it more, if you're going to partner up with the GP, is it like having an LLC, you being on the LLC with them, signing loan docs, or is it just like an agreement that you guys do this, you're bringing in the capital, and we sign a form saying we're working together on this? Is it as simple as that, or more complicated?
I would definitely do the former rather than the latter, which is that you guys are in an LLC together. You're both jointly and severally responsible. You're responsible for them, they're responsible for you. And you have your duties divided up, as any partnership would, but you're in an LLC. That's the management company that then manages the entity where the investors are. So you two are together. If I can just draw on the air real quick, we have one LLC here. That's where you and your friends are, or your partners are. And then we have another LLC down here, and that's where your investors are. And this LLC manages this LLC.
Makes sense. Sounds good. Perfect. Yeah, that answers a lot of the main itching questions of the group. I wanted to kind of talk about, because I wanted to kind of direct some of the listeners, and as well as our group, over some of your informational series. I understand you have a series called Private Money Rockstars. And
Yeah.
would you mind talking a little bit about that?
I'm so proud of that. And I have to thank my brother, Tim, because he edited a lot of the videos. If you go to Private Money Rockstar on Facebook, we have these things called Private Money Minutes. Literally a minute, no more than 90 seconds long. And we have 52 of them, one for each, week of the year. And you can go and check those out, and it won't take you that long to get through all of them. And it'll give you nice little, quick bites of information on how to raise capital and how to structure deals and all that other good stuff. And we also have a program called Private Money Rockstar. And if you're interested in that, you can check it out at privatemoneyrockstar.com. It's more of a coaching program, learning how to raise private capital. I could teach you the legal ins and outs of raising capital all day long till I'm blue in the face, right? You're the most glorious documents in the world. It doesn't do you any good if you don't know how to go out and raise the capital. So the Private Money Rockstar program kind of blends those two things together, the legal and the marketing, so that you can go out and raise capital successfully.
Awesome. And then your book as well, that kind of covers on a top level view of it, or you mentioned
Yeah.
about some of the myths or something like that.
Yeah, it's called Crowdfunding Myth. And I'm going to be perfectly frank with you guys. This sounds really bad. Buy the book if on Amazon if you're interested. Also, if you sign up for Private Money Rockstar, you get a free copy of the book. But understand that book was written several years ago, and the law has changed a little bit. So some of the stories and the quotes and the overall arching advice is really good, but I just don't want you to be disappointed when you realize, oh, wait a minute, some of these laws are out of date. I'm working on an update, I promise.
It changes so quick. So you gotta,
yeah. No, I wrote the book in I think 2016, and it's already out of date.
Oh, wow.
Yeah. It's very upsetting, but anyhow.
Well, that's why we got the the video series and the webinar, so that keep you more up to date. So that's good.
Exactly.
Awesome. Well, to learn a little bit more about you, what's kind of typical work day, and do you have any special morning routines?
So I love to work out first thing in the morning if I get my butt out of bed, because I really have to get it out bed by 4:45 in order to get home. Because the other thing I do is I take my kids to school, and we have to drive through wine country to get them to school. And so we stop at a county park. Most days we stop at the county park, and we meditate at a little lake there. So that's how I like to get my day started. It sets such a great tone for the day. So yeah, I have a lot of things I do first thing in the morning. I make their lunch. I write them a little napkin in their lunch. If you check out my Facebook page, you can see some of my note napkins that I write to them. And then we head on off to school, and then I come here.
Beautiful. Sounds good.
Yeah. Yeah.
Well, with all of your success, all the projects you're working on and everything, what can you say that you're most grateful for?
Oh gosh, my family. They're just so great. And I have 3 young boys and a great husband. And so I'm surrounded by boys all the time. And it's just so much fun.
Beautiful. And I know we got your website, crowdfundinglawyers.net. Is there any other information that you'll be able to share with us to get in contact with you?
Yeah. Just if you need, we do a 15-minute free consultation. If you want to talk to any of the lawyers, we have 5 of them in our office. So if you don't see a time available for me, don't worry about it. There's 4 other lawyers that can take your call, and just go on there and schedule yourself an appointment if you're ready to start going out there and raising capital.
Sounds good. Really appreciate it. It was a great interview. Answered a
you.
lot of our questions. I really appreciate it again. Happy New Year. Blessed to you and the family, and look forward to connecting with you again soon.
Thank you so much.
All right. Thank you. Take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.